Welcome to today's webinar. I'm your host, ADIETALK from the ADIETALK Radio. Today's webinar is on the new Nigerian tax reform that is going to take effect January 1st, 2026. And I have with us Mr. Elisha, is a tax officer from Taraba State, who is going to walk us through how this tax will impact Nigerians in diaspora. Welcome, Mr. Elisha, and thank you for being here with us today.
ADIETALK Radio, connecting you to Africa.
Working in the tax office has not been easy because you can see so many challenges. People robbing people off because they don't know what the tax law is all about. I have some examples of people being cheated because they don't have knowledge of tax. Like, we went to the taxpayer's office not long ago. After educating him, he said to us, some people made him to understand that tax office is like a shrine that you cannot enter and come out the same. We said, no, that is not the way it is. We are here to help you to know your obligations so that you will not feel cheated and you will not be cheated. For example, a taxpayer once told us he was asked by an officer to pay a certain amount, and the amount is outrageous. But lucky enough, someone close to him knows me, and he called me. When he called me, he asked me, I asked the taxpayer, when did you register your company? He said 2024. I said, registration in 2024, you're not supposed to pay tax in 2024. I checked his tax details. So you see, out of ignorance, someone tries to maybe robbing off some money in the name of tax. So that is why we are here. As a non-Nigerian, there are, or as a non-resident in Nigeria, because I believe we are all Nigerians, just that we are not resident in Nigeria. So there are some things, some key effects of Nigerians abroad that you need to know so that you will not be robbed of your income in the name of your paying tax, meanwhile you are not even supposed to pay the tax. In the 2025 tax law, a foreign income is exempted from all taxes. That is number one thing you need to know. Foreign income is exempted from all taxes. If you live and work abroad, your foreign salary, pension, or any business you do and earn income abroad is generally not taxable.
So let me just let's pause a little bit just so we can digest it. You're saying that for those of us in diaspora, that our incomes, our foreign investment is not taxable in Nigeria.
It's not taxable in Nigeria, but it is taxable in the country you base. And for emphasis purpose, even if the money is received into Nigerian bank account, as far as it is not earned in Nigeria, as far as no profit on that money, it is not taxable in Nigeria. I hope that is well understood.
So you kind of broke out from there. So if I understood, you said that even if the money is in an account in Nigeria, it's not taxable. Is that correct?
It's not taxable.
Okay. So that's good news for us. So just to summarize, if our income, our investment, and even if we send the money into our Nigerian account, right, were exempted. It's not taxable.
Yes.
Okay, that's a good news. All right.
Foreign income is exempted. Yes. So, secondly, residency determines your tax liability. Your residency determines your tax liability. That is, your tax status depends on your tax residency, not your Nigerian citizenship.
Okay.
An individual is generally considered a Nigerian tax resident if he spends at least 180 days or more cumulatively within a 12-month period. That is when he becomes taxable in Nigeria.
Okay, so there's a caveat there.
Well understood.
So there's a caveat there. So even though I earn my money in the foreign, endeavor that I am doing, if I come to Nigeria and live in Nigeria or stay in Nigeria for 180 days, then
183 days.
83 days.
Yes.
Then they will tax me. So they will tax me based on what? Is it based on the income that I'm earning from that country, or which income are they going to be taxing?
No, what I'm trying to say here is, what I'm trying to say about this very point. If you stay in Nigeria for 183 days, but you did not do any business, you are not going to be taxed.
Okay.
But if you are in Nigeria for 183 days within the space of 12 months, if you stay in Nigeria for 183 days and earn any kind of income,
oh, okay.
Do you understand me now?
Yes.
You earn any kind of income, then it is taxable in Nigeria. But if you are not resident in Nigeria and you did not stay up to 183 days in Nigeria, then any income you earn is not taxable because you are not considered a permanent resident in Nigeria.
Okay.
Until you spend 183 days and above. I don't know if it is understood.
Yes. So as long as I do not earn any income in Nigeria, then I'm still exempted, even though I'm there.
You are receiving
some kind of income.
Even though you are there.
Okay.
Yes. Yes. A cumulative period of 12 months, and you maintain a permanent home or have a substantial economic and family ties in Nigeria during a tax year, then you are considered a resident taxpayer in Nigeria.
Okay.
But if you did not stay up to that period of time, then you are exempted from any kind of tax because you are not considered a resident of Nigeria.
So even though I make money within this time?
Yes, if you did not stay up to 183 days, then you are exempted from tax.
Okay.
Yes. If that is not understood, maybe someone should ask again so that I can find another way of explaining it.
I believe it's quite clear, that even though I stayed in Nigeria, right, within this number of time that's allotted in the tax law, if I do not earn or make any business or any income in Nigeria, then I will not be taxed. No sales or anything within this time.
Yes.
Even if I do, right? Even if I do, but if it does not reach 183 days, I will not be taxed.
Yeah.
Okay.
You will not be taxed. Yes. Okay. Yes, that's what the new tax law tries to clarify for Nigerians abroad.
Okay.
Yeah, and the next thing is Nigerian sourced income is taxable. Nigerian sourced income is taxable. Non-resident Nigerians will be taxed on income that arises or derived from Nigeria, such as rental income. If you own a property in Nigeria, even if you don't stay in Nigeria, but that income comes from a property in Nigeria, is taxable in Nigeria.
Okay, so for those of all that have built home, let me just be clear, right?
Yes.
And
Yes.
we rent
Yes.
our home or houses to
Yes.
renters, right?
Yes.
Now
Yes.
that is
Yes.
taxable, you're saying.
It's taxable. It's taxable. Yes.
Even though I
That
didn't
is
make the money
rental.
in Nigeria, but I built the house using the foreign money that I earned.
Yes.
Is taxable.
Yes. It's
Okay.
taxable because the proceed of the property is from Nigeria.
Okay.
Nigerian property. If it is a Nigerian property, that is why it is called Nigerian sourced income. A Nigerian sourced income is taxable.
Okay.
Yes. Like I said, non-residents will be taxed on income that arises or derived from Nigeria. If the income is earned from Nigeria, is derived from Nigeria on any property, like dividend from Nigerian company, maybe you have an investment with any Nigerian company and you earn a dividend from that Nigerian company, that dividend is taxable through what? Withholding tax.
Mm.
You understand?
Yes.
Like rental property located in Nigeria is taxable in Nigeria, even if you don't base in Nigeria, but that property earn you an income from Nigeria, it is taxable in Nigeria. Dividend from a Nigerian company is tax. Select that tax from dividend, withholding tax. I don't know if everyone understands the context of withholding tax.
Yes, I believe so. Folks, if you do not understand, please feel free to speak up.
Yes, yes. Now, dividend is taxed through withholding tax. Then, profit from trade or business carried out in Nigeria, which of permanent and establishment and significant economic presence. That is any profit on trade, any kind of trade. If let's say you are in the UK and you maybe run a trade or business in Nigeria, you understand? That one too is taxable in Nigeria. I don't know if it's understood. We'll go further.
Yeah, I think that is clear. So what you're saying? Go ahead.
Rental income.
Yeah, rental income. Dividends.
You well understood, right?
Yes.
Now,
any stock investment and all that in Nigeria is taxable.
Yes. In Nigeria, yes.
I think somebody wanted to ask something. Did somebody wanted to ask something?
I just want a clarification about the duration of your stay, the 183 days. That does not apply.
Okay.
It does not apply with this, your dividend and any investment, because you're not there. Does that 183 days still apply? Because you mentioned that if you are there for 183 days and doing any kind of business, then it's taxable, quite understandable. But you're not there, however, you're doing this business. So that 183 days does not apply to this. Is that my understanding?
Yeah, it does not apply. It does not apply to
Nigerian
source income. Yes. Well understood, right?
Yes.
Yes.
That's a good question.
And then the second thing I wanted to ask is, in terms of owning a property in Nigeria and it generating income, because it's your property that you build.
I didn't hear that quite clear. Can you repeat that question?
No, I was saying that when you're building a property in Nigeria, and with your income from here, wherever you are outside Nigeria, that you bring in to build that property in Nigeria, is that a taxable income?
You say it's fiscal. So for what I understood, if you rent it, right?
So if you rent it after you finish building it.
Yes.
Okay.
Is that correct?
Thank you.
It's taxable.
Okay. Is that correct, Khalid?
But that, yeah, yes, ma'am.
Okay.
Yeah, I said the money you use in building the property in Nigeria is not taxable. But if you rent the property out, then the proceeds from the rent is taxable in Nigeria.
Right.
Understood?
Yeah, that is clear.
So can we go further now?
Yes, please proceed.
All right. Now, and gain from disposal of certain Nigerian assets. Gains from disposal of certain Nigerian assets, such as real estate or shares in Nigerian companies that derive value from Nigerian assets, is also taxable in Nigeria.
Can you say that one more time?
Is that one understood? I say gains from disposal of certain Nigerian assets, such as real estate or shares in Nigeria. Any gain from disposal of real estate, shares in Nigerian companies that derive value from Nigeria, such assets are taxable in Nigeria.
Okay.
Any question? We should go further.
Yeah, let's proceed. Yeah.
All right. Now the next
I
one
just
is
need a
Remi.
clarification.
Yeah, go ahead and ask
something?
your question. Somebody needed
Right.
clarification.
Right. You said the share,
All right.
any derivable income
Okay.
from any shares or sales of a property or businesses is taxable. Is that, I hear
Hello?
you. Is it the gross taxable or the
Please come again. You are breaking.
okay. My question, you hearing me now?
Yeah, I'm hearing you. Go ahead.
Okay. No, I'm just trying to clarify those income, the shares that you were trying to explain, and disposed income in Nigeria, the
Hello?
disposable assets in
Oh my
Nigeria,
gosh. Network.
the income that you derive from the disposable income or shares
Hello?
or whatever, that income is
Hello?
taxable. Is it the gross benefits of disposing that income in that property that is taxable, or they tax you on your own interest on what your profit margin is?
No, it's on the interest you
On the
gain
interest.
on the asset you dispose.
Okay, on the interest, not
If I
on
hear
the
you correctly. Yeah.
Yes, yes, that's
Yeah,
what I'm
the tax
asking.
is on the gain.
On the gain. Okay. So it's not on the
Yes,
gross. Okay.
yes.
Thank you. That's what I meant.
No, it's not on the gross. It's not on
Okay.
the gross. It's on the gain, on the
The
profit.
gain. Okay, profit. Yes. Thank you.
Yes. Yes.
So let me ask you, what about if I have some money, because we don't really have time now, time is running. What if I have some money in the account, even though it's not derived from Nigeria? So I have like maybe 2 million, 3 million, over 1 million or whatever, and I earn interest in that. Is that taxable?
As far as it is not from a Nigerian source of income, it's not taxable.
Even though I earn interest on it?
Yes.
Okay.
It's not taxable. Yes. That brings me to my next point.
Okay.
Remittances are not taxed. Remittances are not taxed.
Hallelujah.
Money sent to family in Nigeria for upkeep, gifts, or personal projects is not subject to tax.
Okay.
This point is well clear.
Yes, very clear that as we are now diasporans, when we send money to Nigeria to upkeep for our families, upkeep or whatever we want to do there in terms of helping people, a gift is not taxable.
To do a personal project.
Okay, it's clear.
It's not taxable. Yeah, it's not taxable. Just make it clear. It's not taxable.
Okay.
Yes.
Okay.
So the filing obligation let's say in case of any, these are the points you need to understand so that somebody will not come and just say, pay tax on this money, pay tax on so money. Now, with these points, you will understand when and where you are supposed to pay tax and when you are not supposed to pay tax. And you do not need a Nigerian team, or you have to file annual tax return in Nigeria unless you earn income from a Nigerian source. That point is understood, right?
Yes.
Now, all these things, the new tax law came into being to avoid this double taxation of a thing, so that you will not be taxed in maybe UK and you are taxed in Nigeria again. So you see, with this clarity, you will not be taxed double.
Yeah. Yeah. And and really it's good that we have this clarification, because from the kind of notion we're getting, it was sounding as if, once you have a certain amount in the account, regardless whether you earn that money in Nigeria or not, you'll be taxed.
Yes.
So I'm glad to hear that it's not, so they are not going to tax us as long as that money was not earned in Nigeria.
Yes.
Okay.
So I believe we are going on the same page.
Yes.
Everyone is understanding what we're talking about here.
I believe so.
All right. The reform offer general investment incentives in key sectors. There are incentives for diaspora investment. Incentives like agriculture, creative arts, manufacturing, which are also available for diaspora-led investment. In essence, the new tax law aims to provide clarity and align with global practices, focusing the tax net on income earned within Nigerian borders while protecting genuine foreign earnings and remittances. That is what I said now is for individuals, right? This with individual Nigerians that are in diaspora. Now let's talk about businesses, like big companies. Do we still have time?
Yes, we'll have some time, yes.
All right. When it is like time, you let me know.
Yes, I will.
I will try to round up. Thank you.
They will have like 12 more minutes, yes.
Okay, we have 12 more minutes.
Yes.
Then let me just brush this one so that we go. Branches and other entities of foreign companies earning income in Nigeria will pay taxes in 2026, sorry, under the new tax law, the Nigerian Tax Act 2025, which takes effect from January 2026, solidifies the rules for taxing non-resident companies operating in Nigeria. Now you see, if you own a company abroad and you have a branch in Nigeria, subsequently you pay tax in the main branch of your company. Let's assume MTN Nigeria. If they have their main office, let's say in South Africa, and they just operate their branch here, subsequently they don't used to pay tax in Nigeria. They send their taxes to the main office where, the main country, the country where their main branch is residents. That is where they pay tax. But in the new Nigerian tax law, even if you are a branch company, as far as you earn income in Nigeria, you will pay tax in Nigeria.
Okay. So in the past, just to be clear, in the past, those companies never used to pay taxes in Nigeria because their headquarters is out of Nigeria. But in the new tax law, whether they pay tax at the headquarters country or not, they will still pay taxes in Nigeria.
They will still pay taxes in Nigeria as far as they make profits in Nigeria.
Okay.
Is that one understood?
Yes, that is clear.
Yes, okay. The Nigerian tax system for non-resident company is based on the principle of derived from, brought into, or received in Nigeria income, as well as the concept of significant economic presence. Now, the major corporations in big companies will have to file some certain kind of taxes. I don't know if this is relevant for this class, but this awareness.
It's okay. Every
The
awareness is very
CIT.
important because we're still going to play it, and folks who may not even are here for that may benefit from it.
Yes, okay. Then, non-resident Nigerian company are subject to Nigerian company income tax on profit attributed to their Nigerian operation. Like I said before, they will file proper tax, that is company income tax, as far as they are a company, mega, and they are charged on 30% of their profits when the company earns like 100 million and above.
Okay.
If your turnover is 100 million and above, and your branch reside in Nigeria, then you will pay tax in Nigeria. Is that one understood?
Okay. Okay.
Now,
So the range is 100 million and above for those companies
100 million
that
and
are
above.
not registered in Nigeria, but they are operating in Nigeria. So anywhere
Yeah.
100 million above, they have to pay 30%. Is that what you're saying?
Yes.
Of that.
Yes, they will
money.
pay 30%.
Okay.
Is anyone saying something?
I think we got it.
All right. A foreign company can be deemed to have taxable presence, that is significant economic presence in Nigeria, even without a physical office, particularly
Okay.
if it earns income from digital activities, technical, professional, or management, or even consultancy services provided in Nigeria. It's taxable. So even if you don't have a physical company branch in Nigeria, that's what this place is saying. If you don't have a physical company branch in Nigeria, but you earn income maybe through network or any professional services you render to anybody in Nigeria, you will be taxed. And how are you going to be taxed? Through withholding tax. If you render a service in Nigeria, before they pay you, withholding tax has to be deducted
Okay.
before your payment will be executed.
Okay, so let me just be clear. So companies like Facebook, YouTube,
Yeah.
and all those
yes,
big
yes.
giants companies, they will
Thank you.
begin to pay
Thank you.
taxes to Nigerians now.
Yes.
Okay.
Yes.
Okay.
Yes. Physical office does not matter.
So the way that you
digital.
describe that they're going to do that is before the payment is done, the government will first of all take out their own part.
Yes. No withholding tax. Yes. So we have also for large multinational company. That is effective tax rate for large multinational companies with global revenues exceeding 750 million euros or a Nigerian turnover of like 50 billion are subject to a minimum effective tax rate of 15% on their Nigerian profits.
Okay.
Yeah, on their Nigerian profit. That is for multinationals. And for value-added tax, the standard rate for non-resident companies remains 7.5%. Providing digital services to Nigerian customers are required to charge, collect, and remit to the tax authority. Now, this is talking about any digital service you render or to any Nigerian company. Before you pay the Nigerian company, I don't know if that one is understood. Before you pay the Nigerian company, you have to withhold 7.5% and
It's
That's
recording.
that. An American came to Nigeria.
Okay. Sorry, it's going in and out. You are kind of breaking there.
Yeah, the network.
Yes, but we can hear you now. Yes. So we have like only 4 minutes. I don't know how we
Came to
can.
Nigeria, lodged in a hotel. Came to Nigeria, lodged in a hotel for maybe commercial purposes, and at the end of the day, he's supposed to pay them before leaving. In that case, that foreign company has to withhold 7.5% of VAT. That is for enterprises. Withhold 7.5% and remit it to tax authority.
Okay.
In Nigeria. Yes.
Okay.
So I think these are the few things that that Nigerians abroad are supposed to know concerning this 2026 tax law. I don't know if there is any question or any clarity needed so that we can discuss it further.
All right, folks. So we only have about 3 minutes, and this is an opportunity to ask any additional questions you may have. Is there any question,
Yes.
any clarification, all that he has mentioned? So let me ask, what will be the implementation, and is there any consequences if these are not followed?
Yeah, the usual consequences for maybe avoiding tax or breaching tax law is usually penalty, interest, and maybe some jail terms. These are the consequences of. But mostly, maybe you are due for a tax and you avoid it or you evade the tax. We all know that the consequences of penalty, interest, some late return penalties also. All these are different consequences for avoiding taxes or even delaying. You know, we have a period for tax payments. We have due dates. We have tax periods that you are supposed to remit all kind of taxes. Let's say, for example, for VAT, value added tax. You see, that is the tax that is paid monthly. So if you fail to do so, there are consequences of maybe penalty. And in the 2026 tax law, the penalty is going to be 50,000, and there is also going to be interest on it, on the 50,000. So you see, at the end of the day, you realize that you are supposed to comply even before, because the tax in Nigeria or tax everywhere gives you the liberty to assess yourself and pay the tax even before the tax officer will contact you.
Okay.
I don't know if that is understood. Yes.
Yeah, that's understood. Now, in terms of the enforcement,
Yes.
what is the method of enforcement? Because, for example, in the United States, where I am, you have all kind of systems that is already situated for this kind of thing. How does Nigeria intend to do this?
Okay, the enforcement.
So, in other words,
First,
how do you know people have not paid or paid their taxes? How do you track it? And
All right,
also, how do you make it even?
we have our database, we have our tax system, tax nets, that every taxpayer is supposed to register, one, with corporate affairs, and two, with Federal Inland Revenue Service now, but will be Nigerian Revenue Service in 2026. So we have our tax net. Every taxpayer is in our tax net. Like, let me make an example with where I am now in Taraba.
Mm-hmm.
I have all the data of all the taxpayers. So what I'm expecting from every taxpayer is self-compliance first. Self-compliance. Because even if you fail to comply, my system will show me the taxpayers that complied and the ones that did not comply. Mm-hmm. So that is when the enforcement will come into being. Because we have to follow you. If you do not comply willingly, then the tax officials will follow you to make you comply. But that one comes with consequences of penalty and interest. For company income tax, it is done once in a year. For VAT, it is done once in a month. For capital gains tax, it is done when you dispose a property. For withholding tax, it is done whenever you withheld a tax and you remit it. So that can be done anytime.
Okay,
so
let me ask you.
Yeah, yes, ma'am.
No, I wanted to ask, so here in the United States, they do have like sales tax, where when you go to buy something, they also tax you in addition to your income taxes. And it's not monthly, it's added tax. Okay, that is a value added tax. So, yes. So the person that is doing the sales will not be charging the taxes.
Yeah, the person that is doing sales will charge the tax on every individual that is purchasing his maybe property or his services. Take for example, hotel services. When you book a room, the hotel will charge you for that sales tax that you're talking about. Maybe 7.5% in Nigeria of the amount you pay. The hotel will charge you. Then the hotel will be the one now to remit that to the tax authority.
Okay.
Yes, that's the sales tax.
Okay.
Yes, ma'am.
Okay. I mean, we're really above time. I know that we started a little late and that we are, giving this a little grace period. So just to round it up, is there any other thing that you would like the audience to know that is very crucial, especially to Nigerians in diaspora?
Yeah, I think I have done justice to most of the points that are important for everyone to know. Okay. Unless if you want to know a little about Nigerian tax, that is those that are resided in Nigeria, the kind of taxes they are supposed to pay, the period and the percentages of the taxes they are supposed to pay. If that one is important to you also then. But for Nigerians in diaspora, what you are supposed to know in the new tax law, I think I have outlined them in the lecture.
Okay.
Yes, ma'am.
All right.
It is important to know that you comply willingly before a tax officer will contact you. It is very important. It is very important.
Okay, so everyone, you're hearing that is very important for you to comply, right? Instead of the tax officer coming to you, you go to them first.
Yes.
Okay. All right.
Yes. So any kind of question, Prof, you have my number. You can contact me at any time and I will respond.
Sure. All right, folks.
Thank you very much.
We've come to the end. I just want to use this moment to thank Khalid for spending this time irrespective of the technical problem. Hopefully, with all these taxes that Nigeria is going to collect, right, they are going to put some infrastructure toward network
We get a
issues.
very good network. Yeah.
Because we definitely need a very good network. All right. So as you can see here in the United States where I am, I've not gone out since I logged in, and you can hear me loud and clear. So we hope that with all this money that the Nigerian government is going to begin to collect, that they will do something regarding all the challenges, including security, issues that we're currently having. So please, we're looking forward to that. I think we deserve better. So, but anyhow, thank you so much, Khalid. Irrespective of the challenges, you still have the time, to come and educate us on the new taxes that is going to come before us coming January 1st, correct? 2026.
Yes, ma'am.
Okay. So as soon as you say Happy New Year, it's hitting us. So beware.
Yeah.
All right, folks.
Yeah.
So thank you so much, all our audience who are listening across the world. And also thank you for those of you that logged in via Zoom. I know that Saturday is always a busy time for a lot of us, but you took the moment to log in, to educate yourself. Like Khalid said from the beginning, that it's always better for you to arm yourself with information so that no tax person or nobody, right, will come and tell you otherwise. Yeah. So thank you. I also want to say a special thank you to Anthony, Pere Anthony, who actually gave us the contact, to Khalid, who has done a really great job. And thank you everyone for listening. This talk will be available to be played via the radio as well as YouTube and all the social media, because we have to continue to play it, right? As they say, hearing and hearing and hearing, we'll continue to educate you. So stay tuned as we continue to bring you good things coming from the African region. Today is from Nigeria. We'll continue to, this is the #1 station that brings in all the African happenings. So stay tuned, and God bless you as we end the webinar today. Take care.
ADIETALK Radio, connecting you to Africa.